team, we had a dovish Fed pivot today. Let's talk about all the price action. We'll go through the Fed minutes. We'll go through NVIDIA earnings in detail. Before we do that, quick first disclaimer, nothing in the video should be construed as investment advice or recommendations. Always follow your own trading plan, your own risk parameters. Don't YOLO into anyone's trades. All right, let's dive into the video, team. Today was a pretty solid day of price action. So let's take a look here. We had the S&P 500. It finished up 0.88%. We have the NASDAQ QQQ at one spot. 4 IWM small caps were leading the NASDAQ once again, up 1.8%. The dogs of the Dow Jones were up just 0.59%. And then we had the ARK Innovation ETF of 4.64%. You can see pretty much everything closed up towards the upper end of its day's range. We did actually get a pretty nice vol crush across the board, and the breadth was pretty solid. We had 76% advancers in the small caps, and my trend model flipped back to a +1. Not to mention, we ended up finishing the day with 82.5% up volume. We got a couple different things to talk about here. A lot of the fund managers are gone. Retail's basically like net short. And here we are. Look at this heat map for today. This is pretty fantastic. So let's talk a little bit about our Fed pivot that occurred today. We did get the Fed minutes out at 2 p.m. and the Fed minutes, they're backward looking. So nothing too crazy. In my opinion, for the most part, it's really just a trigger. And it's also an opportunity for the predator algos to take your stops if you're a retail punter. So I always make sure heading into binary catalysts, I'm never actively trading the market. And you really just have to make the decision at some point, like what's more important to me, like keeping my mental capital and financial capital or just pushing the buttons. But take a look, once 2 p.m. came around, we did get a bombshell headline. And it was this one right here. I have some of our latest Fed speak just all on this one slide. But look at this, many saw Fed well positioned later this year after tightening. And I just put here as my commentary, that's a dovish pivot. So yeah, as soon as that came out, I knew, hey, there is the potential for these predator algos to just take out everyone's stops and kind of move around a little bit. But the path of least resistance is higher. And why is that? It is because now at this point, everyone is conditioned. Everyone knows the narrative. There's a lot of people out there, especially on Twitter, that they're not actually thinking. They're really just regurgitating narratives that they've heard, and they see a bunch of smart people say something, so then they start saying it. It becomes just really like an echo chamber. So the latest narrative was the Federal Reserve is hawkish. They're going to keep hiking until something breaks. And a lot of like the macro perma-bearish Twitter accounts, you know, they just tweet this constantly like, oh my gosh, the Fed doesn't have your back anymore. The Fed is behind the curve, like that sort of thing. And yeah, for a while, they were totally behind the curve. And that's why the market had this huge correction. And that's why treasuries have been in such a downtrend. The yields started moving higher because the Fed was behind the curve. That's why we had that entire move and that entire sequence. Now though, ever since this was our trigger, we have the negative GDP Q1 print that came out maybe close to like a month ago now. And then our CPI and PPI prints that came out that were sequential decelerations. Now look at the latest commentary. Bostic, depending on the economy, may be prudent to take a break in September. That was on May 23rd. This was Bullard. I believe this was even before Bostic. Can be lowering rates in 2023 or 2024. Then again posted this last night. Bostic again saying, hey, these are the two conditions we have to meet before changing our tune. They're now giving the criteria for what it would take for them to be more dovish. Inflation slowing meaningfully, and signs that the US economy is cooling. And then of course today when the Fed minutes came out, again, we saw the same thing. So it is important to not just get caught in a narrative. It is important to just understand when things are changing, because when things change, that's when players act. Let's take a look at these sectors. Energy is still moving higher. So this is very odd that we're getting treasuries rallying while energy continues to move to the upside. And while we are starting to see the Fed turn a little bit more dovish, so yeah, definitely some strange dynamics. We have solar energy that's in our number 2 momentum slot. But the big winners for today, we had retail up 6.88%. A lot of these rate sensitive areas of the market had nice rallies as well, like the ARK Innovation ETF, ARK Next Gen Internet ETF. And what else here do we see? Global social media had a rally. Innovative tech, which got killed yesterday, had a very nice rally today. So we are starting to see the changes under the hood. We're seeing them just from a macro level in terms of the narratives, and the talk track of the Federal Reserve. So all these things are pretty good on an incremental basis. Take a look at your style factors. High beta was the best performing style factor. So that is pretty good with momentum not too far behind, and cyclicals. Let's take a look. Dick's Sporting Goods reported earnings this morning. So remember, we've been talking about this the past 2 weeks, that we're seeing these capitulatory moves with companies that are reporting earnings. Earlier in the earnings season, we were seeing names, if they had a slight miss, down 40%, 50%. Crazy moves. Now as we get further along and the market just continues to do this, chopping around in this really volatile but very tight range, honestly, now this is the first sign of us starting to see companies missing earnings, posting things that are pretty much like recessionary, but the companies are actually rallying. I am seeing a ton of people now that are saying like, oh my gosh, everyone, listen to me. I think we're going into a recession. And honestly, by the time you get the first negative GDP print, and then you start seeing all of the backward looking data that tells you the economy is weak, there's no longer any alpha in predicting a recession. Like, it's pretty much like, it's like me telling you like the sky is blue, and then you predicting, hey guys, guess what? The sky is blue. Like, it just doesn't make any sense. Yeah, Dick's Sporting Goods, this price action is almost appearing as though, the market's saying, hey, we're pricing in for these bad earnings. We're pricing in for this recession. Oh, and now that we actually got the numbers, hey, we can allocate back to this name, at least partially. So yeah, these are definitely very subtle shifts in the market when you put together the entire mosaic, and the fact that you can see the positioning is very light. You can see the sentiment is negative. You can see the Fed turning. You can see treasury yields changing. These things, they start to come together very nicely. And speaking of putting together the mosaic, it all comes down to the price action. In the S&P 500, over the last 2 weeks, have we really done anything? No, it's just been a volatile mess. But now look at this, our teal downward trend line, which has been undefeated. We have had a couple times where it looks like we're going to break out and then we fail. But nonetheless, we pushed right up to that downward trend line. Now we're above the 5-day EMA, trend model flip positive. And look at this, if we have any sort of rally tomorrow, we're going to be up outside of that teal downward trend line. And before you know it, we are within a stone's throw away from the 20-day simple moving average. Now here's the key. That 20-day simple moving average, there are tons of trend followers, CTAs, that currently have little to no exposure to the market. If we breach that level on a closing basis, there will be machines and algos that are now forced to buy the market. And from there, a chase can ensue. So it is pretty wild. If you're just looking at the macro picture, you're going to miss something like that because it's pretty much mechanical. And for the most part, it's really just like rules-based, algo-driven, whatever you want to call it. So yeah, I think the odds of getting a short squeeze, we're pretty much starting to hit what I think is that turning point. Now, one thing that could have derailed us is the NVDA earnings. Now let's take a look at NVIDIA after hours. And I did actually put in a limit order to purchase some NVIDIA. Oh, NVIDIA, take a look. We actually rallied today, which is great. We have this virgin points of control below us at 148.22. I thought there was actually a very high probability that we would take that out after NVIDIA reported. Now, NVIDIA did not really report good numbers. I believe they beat on their earnings, then they may have reduced their guidance. I took a look at the numbers earlier. You can just pull those up. But yeah, basically they had a miss for all intents and purposes on their earnings. I like just pulling the earnings data and taking a look at what is going on. So let me just pull that up. So this is something I've been bringing up a lot more with Pristine Capital members when we have these just like really big earnings reports. So this is something that I'm in the process of building out. But basically it's, hey, I can do a data pull. I can look at all the previous earnings reports, take a look at the earnings the company reported, take a look at the earnings surprise, and then take a look at the one-day reaction. And here are just some basic stats. Here's the best reaction we've had for NVIDIA, an 8.25% reaction. Here's the worst reaction, almost a 20% downside move. This number down here, this is what the market makers were implying for the earnings move, plus or minus 11.10%. That level of price movement was baked into the cake, meaning that so long as NVIDIA is within that 11% move, that's no shock to the system because that's been fully accounted for and priced in. So if you're just looking at the mainstream financial media, they see NVIDIA is down after hours and they just go, NVIDIA plunges after hours. And if you're just the layperson that's reading that, you're thinking, oh my gosh, the market is in trouble. But NVIDIA right now is trading down to 158.6. from where it was at the close, 169, that's, what is that, like an 8 or 9% move? That's within the expected move. So honestly, that's not really that big of a deal. And take a look. Right now we're at around $158 for NVIDIA. That is trading down to price levels not seen since yesterday. So overall, I think this NVIDIA earnings report, it could have had the potential to really derail the market if it pulled a Netflix, if it was down 20%, or if it pulled an Upstart, it was down 50, but we did not see that. So yeah, all these potential bearish catalysts, so far none of them have really manifested and taken the market out from its current spot. And now that we know that the Fed is turning a little bit more incrementally dovish, we could start to see the dynamic where bad news is good news in terms of economic slowdowns. Now we're gonna have to see, every inflation print is as always going to be like a nail biter, because in order for the Federal Reserve to keep this up, saying, hey, we could ease off the gas a little bit, we have to see sequential slowdowns in the inflation data. Here's another area where everyone's gonna get lost in the sauce if you're retail. Let's say the next inflation print, CPI, comes out at 7%. The layperson, or like the macro perma bear, is going to go, that is ridiculously high inflation, recession, it's horrible, bear market, when in reality, all that matters is that we see sequential slowdowns in terms of what the Fed is doing. That's another thing to keep at the top of your radar. All right, let's take a look at my trades for today. Again, I wanted to make sure that I was not going crazy trading in the morning. So yeah, in the morning I was making sure to get off the screens and just kind of like still pretty active, but I wasn't like trading or anything like that. So what did I do today? Today, this was kind of like a cowboy trade, I'm not gonna lie. I got long the DBC October 21st 28 strike puts for $1.97. I made sure to size that's just very, very small. I've been forgetting to enlarge these. Sorry, Uncharted. That is my bad. This commodities run has been epic. Everyone's now expecting these to run forever, barring another exogenous shock. Inflation likely peak. These are going out to October. This is kind of like a contrarian trade. I don't normally like to do this. Honestly, in hindsight, this might be a bad move, but given the dynamics that I'm starting to see, at some point there's going to be demand destruction. So this is kind of like a macro trade. We'll see how it goes. And then I'm trading around this TQQQ position that I have on currently. I closed out my short calls yesterday. Now I put them back on. I sold some TQQQ, May 27th, 31 strike calls. Took in 21 cents and I was able to reduce my cost basis slightly. And then the Snapchat puts that I sold yesterday. Remember, yesterday the narrative was Snapchat, here's why you would never want to be long this stock. And in reality, honestly, yesterday was just like a great buying opportunity because everyone was capitulating out of it. Snapchat finished out up 10.71%. Basically what I did, I was up over 20% on this position, and I was kind of looking at it and I'm like, this thing is like a dog. It's in a horrible trend. I think the market could start to move a little bit more aggressively higher. So I was like, let me just pull back this buying power. I made over 20% in a day. And this is something I have to think about more for premium selling. If you make, let's say like 20 or 30% on day one, does it make sense to continue to hold on to that trade? Because the most that you can make when you're selling options is 100%. So if you make like 20% one day and then you got like 30 more days to make that remaining 80, is it worth it? So yeah, I just took this one off. What I did today after the close, I set a limit to buy some NVIDIA for 150 in the after hours. That limit did not hit. That would have been right outside of the market maker's expected move. But yeah, so far not getting filled on that, which is perfectly fine. If it doesn't fill, it just doesn't fill. Moving forward, now that I think, hey, we could get a squeeze in the market, I want to make sure that I am really looking for leadership stocks. And I want to make sure right now, because I wasn't so certain, like I had this idea, growth stocks could bottom, whatever, I used a bunch of ETFs and I kind of sprayed it around. And I went with call options going out to January, that sort of thing. But right now my portfolio is very spread across so many different bets. If and when we start to get this rally, we're going to see leadership stocks emerging. And I would like to get more concentrated in those leadership stocks. Like for instance, one of the ones that I own that I really think could be a leadership stock is this DLO. This one absolutely tore the cover off the earnings. And yeah, I'm long this one via calls. This kind of name, if this thing could have, pretty explosive move, I want to make sure that I'm pushing more chips into this. Same thing like with Celsius that I'm currently long as well. Hey, this looks pretty solid as well. Up 6.3% today. tight action. So yeah, rather than going for maybe like 12 to 15 bets, if things start moving my way, I want to really consolidate that and just push my chips to what I think are the best bets. So that's going to be something within our trading community. We are going to really be actively looking for those leadership stocks to really just optimize. And when you enter these different seasons of the market, like this could end up being a rally season, you really want to act accordingly. All right, everyone, with that being said, that about does it for this market recap video. Hope you all have an awesome rest of your evening, and I'll see you all tomorrow.